Hello and welcome back. In this lecture, we are going to discuss about the Elliot Wave Theory, very exciting part. And for many months, I only traded based on the Elliot Wave Theory. And I assure you that if you understand Elliot Wave Theory well, you can also only trade based on Elliot Wave. Although in our strategy, we have a couple of more confirmations that I added after trading Elliot Wave for many months. So those couple of more confirmation will make our strategy more and more stronger. But Elliot Wave, of course, is the basis, is the backbone of our strategy. Before we move towards the Elliot Wave, I want to tell you some bases about the market structure. Keep one thing in mind, that market never goes straight up like this, or it never goes down straight like this. Rather, the market always moves in form of waves. So this is an upward direction, and if we talk about the downward direction, again you will see waves on the chart. When we talk about these waves, one thing we need to understand is that the market, whenever it is in an upward direction or upward trend, you will see that there are series of higher highs and higher lows. So higher high and higher low. This might take some time because I have to draw things, and believe me that this is the easiest way to understand rather than going straight away to the charts. That will not make sense. So we have to spend time understanding it and drawing Elliott wave on charts. So higher high, higher low. If you see the next high, this is higher than the previous high, right? So that's why we call this higher high. If you see the next high of this wave, that is higher than the previous high, so we call it higher high again. If you see this low, let me just mark it. If you see this low is higher than the previous low. That's why we call it higher low. Now the market will keep on printing higher highs and higher lows until it is in an upward trend. On the contrary, when the market is in a downward trend, you will not see higher highs or higher lows. Rather, you will see lower highs and lower lows. So totally opposite of this. So what you see here in a downward direction or a downward trend, that is a lower high. So if you see this low, it's lower than the previous that it must have printed. And also, if you see this low, that is lower than the previous low. So lows are getting lower. Also, if you see the highs are also getting lower each time. So lower high. And if you see the next high, it is also lower than the previous. So now we understand two things. One is that the market always moves in form of waves. And the second thing is that the market, when it is in an uptrend, it prints higher highs, higher lows, and when the market is in a downtrend, it prints lower highs and lower lows. Now let's move on and discuss about the Elliott waves. What Elliot discovered was that market does not only move in form of waves, but rather it creates a similar kind of structure that tends to repeat again and again. When the market moves in any specific direction, that we say towards the trend or in the direction of the trend, or maybe counter trend, or you can say in the downward direction, market always creates an impulse move first and then a corrective move. So what do I mean by impulse is that there will be 5 wave structures. So it will be 1, 2, 3, 4, and 5. Just keep this in mind that an impulse contains 5 waves. Those cannot exceed 5 waves, or the waves cannot be 3 waves. So it has to be a 5 wave structure. Only then we will call it an impulse. Once an impulse is completed, it is followed by a corrective move that we call as ABC correction. Now let's just talk about an impulse first. Let's just draw simple lines. So we will have wave 1, and just delete this. In fact, let me just change the color and thickness. So we have wave 1 that we call as an impulse wave up. Then we will have wave 2. This is corrective move for wave 1. Next will be the next move towards the upside, then a corrective move that we call as wave 4, then the last wave towards the upside that we are calling as wave 5. Now, one thing to understand here is that whenever it is a 5-wave structure that we are calling as an impulse, every impulse contains 3 motive and 2 corrective waves. So this wave 1 is called motive wave. Let's just keep it similar color and the border also. So wave 1 is called the motive wave. I will also write it here. Motive wave. This wave 2, that is a corrective wave for wave 1. Wave 2. We call this one as corrective wave. Then we have the next wave, that is again a motive wave, that is wave 3. A corrective wave, that is wave 4. And lastly, we have wave 5, which of course is again the motive wave and the last subwave of our impulse. We have learned so far is that every impulse contains 5 subwaves. Out of those 5 subwaves, we have 3 motive and 2 corrective waves. Once this 5-wave structure or an impulse is completed, it will be followed by an ABC correction. A, B, and C. So 5 waves when we talk about an impulse, and ABC when we talk about a corrective pattern. Now this structure that you see here, this structure is called Elliot wave structure. We'll have lots of examples of this, real examples, so you will be able to understand it very well. But right now we are just having an introduction of what Elliot wave structure is. So this we are calling as Elliot wave. So I'll just clear up this and let's try to zoom in. So when I say market is fractal, it means that if you look at this complete structure, you can find the same structure here when you talk about 1 and 2. That means, just remember my words in the start. I said every impulse must contain 5 subwaves. Out of those 5 subwaves, we have 3 motive, 2 corrective wave, and every corrective wave must contain A, B, C. That means whenever you see a motive wave, it should contain a 5-wave structures, and whenever you see a corrective wave, you will see A, B, and C, a 3-wave structures, to just to keep it simple right now. So that means if I zoom in here, when I said the market is fractal, that means it will repeat on lower as well as on higher time frames. So this is what I meant by fractal, that whenever you see an impulse, you must be able to see 5 subwaves, and whenever you see a correction, you should be able to see A, B, and C. And this happens everywhere. There is an impulse in any direction, it will always contain 5 subwaves. And whenever you see a corrective pattern, it must contain A, B, and C at least. So this is again a motive wave. What you should see here, you should be able to spot 5 subwaves. Now I said market is fractal. That means if you further zoom in, you go inside this structure. By zooming in, can you tell me what you will be getting inside this subwave, that is wave 1? So you should be able to spot 5 subwaves. And when it is a corrective wave, you should be able to see A, B, and C. If you zoom in further and further, the market will repeat, the structure will repeat, but overall pattern will remain the same. Now, what you expect now? Now let's zoom out and we see at the bigger picture now. So let me just delete this these substructures, the details, and let's just focus on the bigger structure. So let's assume that you are looking at this bigger picture. Now, what will happen next is that once you have this 1, 2, 3, 4, 5 formed, this will become now one wave. And now forget about the green one, that is 1, 2, 3, 4, and 5. Just focus on the orange. So if I'm calling this as 1, what we can expect next? A correction of wave 1. So we'll see a corrective wave, that is this orange. So can I call this as 2 now? So this will be 2. Just stay with me. It's just a starting lecture, but just try to understand the concept of Elliot wave. We are just trying to see the structure of Elliot wave. Now, because this 2 is corrective, what you will see inside? A, B, and C, because whenever it is a corrective move, it's A, B, C. What we expect next after this wave 2 is completed? Of course, we will see an impulse move up. That will be wave 3. And what this wave 3 will contain? We know that there must be 1, 2, 3, 4, and 5. Let's just change this to green to keep the color same. What we'll see next, a corrective wave that we will call as wave 4. And because it's corrective wave, there must be A, B, and C. And lastly, what you'll see? The last move towards the upside, that we'll call the last impulse. So wave 5. And because it's an impulse, it should contain 1, 2, 3, 4, 5. And now, if you look at the bigger picture, the orange only, forget about the green and yellow, just focus on the orange. What you see in the orange color? 1, 2, 3, 4, 5. Isn't it the bigger picture of this green? Just now look at this green, 1, 2, 3, 4, 5, and this became only one wave because the structure is getting bigger. Now we see this orange, 1, 2, 3, 4, 5. So again, the impulse is completed. Can we now call this complete as one mega structure, the bigger impulse, you can say? Let me change the color to blue, and let's just now annotate this as the bigger structure, the mega structure, you can say, and we are calling this wave 1 now. Now if you focus on blue only, what we can expect next? Well, we will be able to see the corrective wave after wave 1. So this will become wave 2. This 2 is a corrective wave, so it should have A, B, and C. Okay. Now this light blue, 1, 2, and what we will see next? Of course, the next move towards the upside, that we'll call wave 3. And what wave 3 should contain? 1, 2, 3, 4, 5. And let's change this to orange, right? Because we are talking about this orange now. And again, inside 1, 2, 3, 4, 5 for wave 1, A, B, C, 1, 2, 3, 4, 5, A, B, C. So every impulse must contain 5 waves. You can just zoom in and you'll be able to see the 5 wave structure inside each subwave. When wave 3 is done, we'll see wave 4. And wave 4, because it's corrective, it should have A, B, and C. And lastly, for this structure, wave 5. So it must contain 1, 2, 3, 4, and 5. Now we further zoom out and we see the bigger picture. What you can see now, or what you can do now, can you say this complete wave as one wave? Because just focus on the light blue, 1, 2, 3, 4, and 5. So that means this complete wave can now be said as wave 1. And then of course there will be wave 2, and then wave 3, 4, 5, and this structure starts getting bigger and bigger. And this is how the market keeps moving on, because market is never ending market. But now we are sure about one thing, that the structure will remain same. Each impulse wave, whatever time frame you are looking at, every impulse must move in 5 wave structure, and every corrective wave that will be in a counter trend. So if an impulse is towards the upside, the corrective wave will be towards the downside. So every corrective wave must contain A, B and C plus the corrective move. This structure we call as an Elliot wave structure. Right? So don't worry, we are just understanding about there. So let's move on towards the chart and try to see that how we can spot Elliott wave on real charts. So here you can see the chart of FTM, that is Phantom, very bullish coin in the recent bull run. And let me just here count the waves, Elliott waves, so that you can actually see that how Elliott wave looks like when you see that on the real chart. I don't want you to actually start counting Elliott wave right away after this lecture, because after this lecture we have a very important lecture where I will discuss with you about the rules of Elliott wave so that you can make sure that your count is correct. So right now I just want to show you that how Elliott wave looks like on the real chart. So we will count here. As you can see, the price started down here, so we went up 1, 2, 3, 4, 5, so that makes complete one wave. Then we have A, price came down, went up B and C, so this is wave 2. Then we have 1, 2, 3, 4 and 5, so we have wave 3. Then we have here A, that will be B, and we are expecting C, so there will be 4 somewhere here. And we still have wave 5 remaining that I'm expecting will be very bullish. I'm expecting around $6 price for Phantom FTM. But if you see here very clearly, we can count Elliott wave. Even if we zoom in and go closer, we can count the sub waves as well. So I will just take my line tool and let's just count the sub waves. So we can clearly see here price went up, came down. So this created wave 1, then we had wave 2, price came down, wave 3, 4 and wave 5, price went up. Now if you see the next wave and count the sub waves in there, you will be clearly counting it as this will be wave 1, this is wave 2, there is a wave 3, then price came down, wave 4 and went up, wave 5. And if we see the corrections, we can see here A, price went up, B and created C down here, and also price came down, A went up, B, and now we are expecting the price to create C. So as you can see, price is coming down. Now when we see say 5, we will expect again 1, 2, 3, 4 and 5 waves up, and after this is done, we will consider this complete yellow structure as one wave. So this will become wave 1, and then you will see wave 2. So that will be correction of this mega structure, and then we will see wave 3, wave 4, wave 5 and so on. So I hope this makes sense. And now let's move on to another coin. Let me give you another example. Let's take example of Solana, Sol. And let's do the Elliott wave count in Solana as well. So this is daily chart for Solana, and let's count the Elliott waves in there. We have this first move to the upside, first impulse, we call it 1. Wave 1 is always the weakest wave. Again, you will learn this in the next lecture. Then we have wave 2, then we have wave 3, as wave 3 is most of the time the strongest and most impulsive move. We will discuss this also in the next lecture when I will tell you about the rules of Elliott wave. Now we are creating most probably A, then we'll have B and C. So 4 will be somewhere here, and then there will be wave 5. So this is overall Elliott wave count for Solana. And even if you zoom in for each impulse, you can very clearly count 3 subwaves inside each wave. For example, I will count this for wave 1, for you. So this is wave 1, wave 2, wave 3, market came down, wave 4, and lastly we created wave 5. And if you see in there, for the corrective wave 2, market came down, created A, went up B, and then came down, created C. And similarly, you can even count 5 subwaves inside wave 3 as well. 1, 2, 3, 4, and 5.